I'm not going to sit here and tell you that I know it all and that I'm some type of guru. I'm definitely not going to tell you that I have the answers for everything coming up, right? And I'm definitely not going to tell you that today I said that was going to be a red day. But I am going to tell you that I did tell you that it was going to be a red day. And more importantly, I told myself. This is ARCa. Let's dive into ticker symbol FNGR. What is up, you guys? Thank you so much for stopping by once again on this happy Friday. This is ARCa. Let's dive in to ticker symbol FNGR. So what I meant by what I said in the beginning in the introduction, team, is that, yeah, I don't want to tell you that I said that today was going to be a red day, but I would like to tell you that I said that today was going to be a red day. But more importantly, I told you and I told me. And yet, you know, we faced the music here, right? But I will have to remind you over the statistics. Let's go over this right now because we need to understand what's coming up for the play, right? So let's go ahead and pull up the drawings right over here. And this is the quad witching back test. Is the quad witching against or quad witching versus FNGR. But now it's the triple witching, of course, since they removed the individual stock options from that list. So now it's known as the triple witching forever from here on or moving forward, right? So, right, so we ended up performing a back test here to see what happens at the week of leading up to that triple witching against the FNGR asset. Okay, so we noticed that we had a total of 27 iterations. Okay, so out of the 27 iterations, 17 led to an upside. Now, from those 17, 9 of those had more than a 100% run, after the witching, and 4 out of those 9, actually 5 out of those 9, I still haven't corrected it over here, man. I really got to do that. I really got to adjust this here. 5 out of those iterations led to a parabolic upside, really an exponential upside, and now we back tested because we knew this here because we found out those statistics. We wanted to find out when that happened, right? So we started going over this. I actually went over this with William and Ham and Avid in yesterday's William's live YouTube, right? So we went over to the daily time frame and we started manually back testing which day was likely to make the green day, right? So please notice down there, right? Notice the dates down here, okay? So look at this. That Friday. That's Friday, June 9th, 2023. That's the triple witching. And that was a red day. And then we noticed that we had massive upside coming into the following week. Right? So now looking back over here, this is, let's see. This is the Friday. Oh, is this actually? There we go. All right. Here's the Friday before the Monday. Red day. And then we got a green day, and then we started making that upside following the days after the quad witching, right? So let's see. And I'm talking about the ones that had that had these parabolic runs, right? So take a look at this here. So this is Friday. It's red. And then, unfortunately, we had a red Monday right after that. But look what happened to the price action. Just 1, 2, 3, 4, 5, 6, 7, 8, 9 days, 10 days. On the 10th day here, price action started ripping all the way to that $9.80 high, right? So it's showing that historically we have seen more red days on the quad witching on the expiry date than not, right? So this is that Monday that actually here, inversely enough, we had a red Monday, but it led to positive price action, of course, right? So we had a green Friday there. So good, fair enough, right? We're noticing these things, cool. This Friday right over here was also green. We had a red Monday coming in, but then eventually corrected and made that upside, right? So let's see here. This is Monday, and we had a green Friday on this iteration here, right? So I guess relative to the immediate iterations, right? Like this one, let's see. Yeah, relative to the immediate iterations, this one being the one, this one here, and this one in a row. The last three in a row have been Red Fridays. So, of course, we faced a Red Friday today, and I do have to say that we have a 60% probability that we may get a recovery starting Monday. And it's very curious on the price action after hours, too. Please take a look. Please take a look at the chart here, as we ended up reaching a very bottom of what's that? 591. All right, so 591. That's already a very curious target in the first place, because we actually came right back down to. I'm talking about right above the 0.382 Fibonacci ratio, and that's special. Let me just go ahead and draw a little box here around it, and that's very special because this is considered the golden pocket. Between the 0.618 and the 0.382 with the 0.5 right in between, that is a golden pocket and a very bullish area to dive into for some nice bounces to the upside. Not only that is that we have a potential 4-hour tweezer bottom here that can lead towards some upside, right? So we actually ended up getting a nice recovery here. In fact, reaching that 591 bottom. Let's see, 591 bottom, right? To the current price action, that led to around a 6.3% recovery, leading back up to that $6.30 level that we were bouncing, just bouncing so much time on, and then eventually failed it and came back down, right? So yeah, we're testing that 630 as a resistance as we speak, and actually the markets are already closed just under an hour ago. The post market. Right, so yeah, we have some combating to do here, but I will say that this is a pretty unique bounce, and I started wondering why that would be the case, and I think I found out. Other than the fact that there's fundamental reasons, and there's a lot of speculation within the exercising of those shares. Yeah, all that stuff, right? But what I wanted to point out here is this. So we were talking about a 5-minute. It was actually this. I corrected it, but this was a 5-minute broadening ascending wedge, and we were talking about the potentials of having this wedge realize after 5 tests of the resistance, which would invalidate the bear thesis within this formation. In fact, as considering the price action today, it actually brought in a lot of light to the play itself. Okay, so first of all, I was able to see and observe the resistance in a different way, and with that said, I also was able to reserve a different opinion here as far as the support regression from the ascending wedge. So go ahead and take a look at this. So this is, in fact, test number 1 of the resistance, right? So we have test number 2 right over here. We don't have a test number 3, right? So that would mean that in this case, this would be test number 3. And guess what? We never had a test number 4 or 5. So please notice here that this is practicing the traditional rules of how to trade an ascending broadening wedge. And what are those? Well, it's following the golden rule of 3. That's test number 1, 2, and 3, capitulation, right? Now, this run here was definitely influenced it was a strange influence here, right? But it ended up being an enormous fake out, right? So this enormous fake out did not test the number 4, which would invalidate the bear thesis. In fact, this was still part of that test number 3 and eventually capitulated, succeeding the outside of the support. Then we actually bounced up. We failed it yet again, and then started testing the resistance, several hourly candle tests, until we finally felt that this was good enough to open short or take profit out of fear, and then send the price action to the downside to eventually reach just shy of the actual take profit per the trading book rules for this formation being at 586. Price action came down to 591. So this was an entire successful play regarding the ascending broadening wedge. And this was, I mean, the targets are clearly shown here, right? So now the thing here is that the play here is done. That's it. The play is entirely done here. And this can lead to a full-on recovery. Statistically speaking, after the quad witching, that's being supported. Not only that, is that in the hourly time frame, we're also seeing declining volume, right? So as we're seeing this declining volume with declining price action, you know that's actually, the volume towards the downside is starting to diminish. So as that diminishes, the probabilities for an upside start becoming more real and more apparent. And that does make sense since the take profit was just down here, ever so slightly off from that target came in. The take profit came in, and then naturally we bounced right off of this area, and we're now facing an upside. So I like what I'm seeing here. Full transparency, I did open up some risk, right? So as you may know, for the options contracts that we just lost on, that was only I opened up. I think it was 15 to 20% of my risk, and I still haven't opened up the rest of the position. So in fact, I dove in and I opened up the October 20th calls just near the end of the trading session at a very, very, very good discount down here, right? So we're gonna see how Monday comes in, right? But in this case, yeah, it looks like the floor is entirely in. I mean, as far as this play is concerned, yeah, I think the floor is in. Now, why would the floor be in? Let's look at this now. All right. So you are looking at a descending broadening wedge. And every single thing about this wedge made absolute sense with its parent formation, right? So we have test number 1 right away on this candle here, test number 2 right down here, and test number 3 followed by the capitulation, just like always, right? We test the bottom side of the wedge and the recovery. And the recovery is, of course, leading towards the true breakout, test number 4, right? So know for a fact that test number 4 and test number 5 are valid for the descending wedge, okay? Now, for the invalidation for the ascending wedge is test number 4. That, testing 4 and 5, that would invalidate the bear thesis. But here, the test number 4 and 5 are validators for an upside. I would start worrying if we start testing 6 and 7. We don't want to test that. We want to make sure that we break out on 4 or 5. And naturally, just like this formation, inversely, your top side, your take profit, is leading to $7.81. I'm not saying that we're going by Monday. I mean, there is a possibility, of course, but I mean, seeing this massive gap up, right? So I'm just saying that the probabilities are there. But more so than not, I think, I'm just going to extend this just a little bit here, right? Just so that we know how this play is currently moving. And I'm going to say that the probabilities here of reaching and resisting at the $7 level are more likely than not. You can see here that, I mean, we were bouncing up and down that $7 today too. So this is $6.99 at the top side of this target right here. So we're just going to go ahead and mark that off, right? Let's create the range. So $6.99. And let's identify the other, let's see, the top side of the resistance, which I see already. But let me see if I can actually make this rhyme with anything else, and anything else that may have more repetition. In fact, it would be this. Okay, 706, yeah, 699 to 706 is what I'm looking for as a resistance, right? Coming up to this area here. So yeah, I expect this to maybe resolve on Monday, maybe even Tuesday, but it's statistically speaking, we are set to recover on a Monday, more so than not, right? So the play is still actually moving along mathematically the way we spoke about yesterday. Okay, so yeah, let's go ahead and now let's see if we have anything else to kind of point at here. Yeah, very, very interesting resistance that I have located at 696 here. We have the 699 located on the wedge. And let's see, so Okay. All right. And this is, we're at 628 right now, right? Let's see. 628 is landing right about here. All right. Yeah. So, good thing within the 2 week time frame is that the 628 target is right upside of these candles here, right? That's a good thing. It's definitely a good thing. Okay. So we're gonna have to observe the price action coming in on Monday, and then we'll see what. But you know what? Something that I did notice live today with everyone present was, in fact, that we were catching an incredible amount of manipulation. And every single minute, this was live. We caught the manipulation signals, and bam, and another one, and huge downside. And we caught the last one here, and this is where we started. This is where I myself. This was already at the after hours, right? So I'm thinking to myself, this could be, this very well could be the manipulation for an upside, and it looks like it was, right? So whomever is actually triggering this manipulation, they definitely knew. They absolutely knew what the bottom side would be here, both on the statistical side, both on the formation analysis from the broadening wedges that we observed, lots of things, right? So we're getting this blue triangle now on a 10-minute time frame, and that blue triangle signals you that the current trend is done and likely a reversal is to be looked at, and this is what we're getting right now. So, and in fact, we are increasing volatility here. We're really, really increasing volatility here with an upside pivot on stochastic momentum on the 10-minute time frame. Yeah, but what I want to say with this is actually that it expands, right? So look at this, the 15-minute time frame with 4 shots of manipulation, and right here just to shoot it up. It's like okay. Thanks, right, for all that, which really sucks. And yeah, but yeah, it was very interesting, to say the very least, to catch this, right? And it was one of the members, one of the ARQ indicator holders noticed this right away and pointed it out to the community, like, hey guys, the ARQ composer coming in with a yellow X. Let's go ahead and take a look at that. And of course, we started getting back-to-back iterations of the X, and we're just noticing a massive amount of manipulation here for that capitulation period. So yeah, it was just outstanding, to say the very least, and also very upsetting, of course, right? We don't want to see retail lose like this. But yeah, so many times manipulated today, and it's just foul play, right? But yeah, it looks like we're in that point of recovery. Take a look at this: expanding volatility in the 15-minute time frame, upside pivot on that stochastic. 30-minute time frame already getting the upside pivot on stochastics, and we're now starting to contract, and this is contracting because this is maxed volatility. All of this maxed out the volatility, so naturally and mathematically speaking, the contraction from this massive downside is mathematically set to revert, and revert to where? To a mean. So if I have, let me see. Do I have the reversion variant here? Let me go ahead and pull that up and see what that can be. Okay, so what do you know? Take a look at that. $6.31 was the reversion on a 30-minute time frame. We came up to 628. So the math is actually mathing here, right? And this is my personal algo, right? So, and notice this. The algo got us a buy signal right over here around the 697. It ended up getting a sell signal right over here at 727. Very accurate. Very accurate. And then it ended up just selling off. So don't trust all these too much, right? I'm just saying that this played out very nicely. So now nicely for the damn Bears. I'm saying that it was a nice signal. Please don't take that the wrong way. I also faced a loss with you, but if you were there till the end of my stream, then congratulations to those who ended up taking the SPY trades that we eventually started taking, right? So we were able to capitalize on very short-term time frame, very, very aggressive gains. So some of us were able to recover thousands of dollars from which were lost on the FNGR play for the options contracts, right? So yeah, the beauty of knowing how to momentum trade and day trade, right, to hedge against those losses is very good. And then just to warn you, you will be expecting that on Monday coming from me. We're going to be looking at the SPY for some 0 DTE options plays and see how it goes from there, right, team? So everything is looking pretty, as I guess as it should for now. And yeah, but now let's go ahead and just look at the last part of the analysis here. This is the RSI. So we definitely have an upside pivot here on the 30-minute time frame. We have a little bit of resistance coming up here on the bi-hourly, right? But I think that this bi-hourly is consistent to the resistance that we're going to face right up here. It very well could be. I mean, I'm going to give you a range. It could be between 671 to the area of about $7 or $6.99, right? So let's draw that in just in case too. So per the bi-hourly time frame, yeah, actually I'm just going to leave it like this. So yeah, that would be this bottom side here, 671 to right over here. That could be the resistance range. So we'll observe that as we come into the Monday trading. Aside from that, yeah, of course, we have some downside here on all major time frames. Let's see the weekly RSI. So yeah, the weekly RSI actually shows that there could be a bounce from the SMA 14. More importantly, actually, it would be the 5-day, since the 5-day is in the gravitational zone of the bull weakness percentile. Very likely we can face a bounce here to the upside, but we will see. Let's go ahead and evaluate the play as we come into Monday. And yeah, please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything would be absolutely cool. But with that said, team, I wish you well, a very good weekend, and I will catch you at the bell on Monday. Adios. Yeah.